So hello everyone, in this video we are going to backtest my strategy of wave theory. Backtest the wave theory. We are going to backtest the wave theory, both the part 1s and the part 2. A quick recap what we learn in the part 1 and part 2. In the part 1 of wave theory, we learn that this there is a pattern like this, and whenever there is a pattern like this, we have a trend line like this. So we consider this one first wave, second wave, first wave, second wave, third wave, fourth wave, fifth wave, and then the trend changes after the fifth wave. The trend changes, and what we learn in the second part, we learn that whenever the trend changes, if the long term trend is of buying, we should plan for buying on these support areas. Okay, expect the first support area because it is the weakest support area, so we should plan for buying in this. And if the trend is of the opposite, we should plan for selling on Fibonacci retracement. Okay, this we learned in the two parts. Now we are going to backtest that. This video will be quite long because the topic is vast. So let's backtest this strategy from the data. Let's backtest. Okay, okay, we will backtest from this time. Let's backtest, not much data. Okay, we'll backtest from this. Okay, is this okay? Okay, wait for a minute. We'll backtest from alt v. Okay, this is a horizontal line. We will backtest. Okay, this video will be of 20 minutes, not more than 20 minutes. I will share the result with you. Okay, we have a big trend towards the up. There is no wave quite. We have a big trend down, big trend up, big trend down, big trend up, big trend down. Here we have. Okay, so we can see the trend is of selling. The trend is of selling. The selling is quite major. Okay, we can see here market heading down. Okay, we have a trend line. Okay, we have a trend line. We have the first wave, second wave, third wave, fourth wave. Sorry, I counted it wrong. First wave, second wave, third wave, fourth wave, and this is the fifth wave. So this is the trend line. I will just adjust this. So whenever it breaks the trend line, what we should plan of? We should plan of selling or buying. Here, what is the long term trend? Bro, the long term trend is of buying. This is the short term trend. Okay, so whenever this breaks the trend line, here it broke, but it showed a fake. Here it broke the trend line. You can see here it broke the trend line. So what we will do, we will mark the Fibonacci up. This is the 50%. We are seeing some buying pressure over here near the 50% level, buying pressure. And then when this candle made this candle, it gave a higher high. By making this candle, we have a higher high. So this will be the stop loss, not much more. The target, we you can take 1:3, 1:4, 1:5, 1:6, but I will prefer to take 1:3 in this video. So what will be the thing that, okay, this, what will think that on 1:2 we will exit 60% of the quantity, and we will hold 40% of the quantity for 1:3. Okay, so here we got 1:2. The stop loss was shifted to cost, and the profit we made was, let's suppose our risk is 1%, so the profit we made would be also 1%. Okay, so we made here 1%, so I will mark here, we got here. Okay, so we made here 1%, so 1%. Okay, then analyze this. Now the trend is changed because selling is quite good, and whereas the longer term trend is bullish, but we can see this breakdown. So this trend is now bearish for me at least. Okay, so another wave we have to find. Okay, we got it. The trend is of selling as we believe. Okay, this first wave, second wave, third wave, fourth wave, fifth wave. Okay, so the overall trend is of selling. We mean that the overall trend is of selling. Okay, so what we'll plan for, we will plan for selling. Okay, how? On Fibonacci retracements. So we have this Fibonacci tool here, marked from this level to this level, mark from this level to this level. We can mark it from this level to this level also. Okay, so here is our trade number one, marked from the top to bottom. We have the trade number one here, so we should take here. Okay, the resistance point is here. Okay, good. This is a good level. Number second, first I will make my levels, then I will execute you. Okay, these are my levels. So my target level is 0.27 point this. Okay, this will be my target level, at least 1:3. So here we got a very good. So the setup is we will take trade on lower lows. Okay, here we got an lower low when it crossed this. So on the crossing, immediately on the crossing, the trade is taken, stop loss above the high, or you can take above the level. Above the level will be safe. Okay, and the target at least go to the negative 27. Okay, negative 27. So it is 1 ratio, more than 1:3. So I will adjust it to 1:3. Wait for a minute. This is a 1:3. Okay. So as I told you, on a 1:2, we'll exit the 50% quantity. Here's the 1:2. 1:2 is here. Here we will exit the 50% quantity, and 50% we will hold for that 30, that 1:3. Okay. So here we got 1:2. After the 1:2, stop is trade. 50% quantity is out. Then the real 50% we hold it to 1:3. We got 1:3. So here the profit will be 2.5%. 3%, but we will take by the charges and all, we will take 2.5%. Okay, number second, here let's go to the down for seeing another waves. So we have the trend as bearish. Now we got some another waves here. First wave, second wave, third wave, fourth wave. This is not a wave. First wave, second wave, third wave, fourth wave. It not bound, it just reversed from here, so we will not consider it as a wave. Okay, so here's also an wave. Okay, I missed that. Okay, wait a minute. First wave, second wave, third wave, fourth wave, fifth wave. Now this is it. So this is the trend is bearish. So what we should plan? We should plan to sell on these levels. But first level we will not plan to sell, because I told you this is the most weakest level. Second level we should plan of sell. Third level we should plan. Okay, so if you are a beginner, you should take on lower lows. But if you are a professional one, if you are some intermediate, if you are some like medium level trader, you should take on this, because this can just identify the selling pressure, and also the buying is quite weak than that of selling. Now here we can see, so the beginners can take here, but for the professional they can take here. So the stop loss will be here, and the target goes to 1:2. Okay, we got to sell it, no problem. Now the second trade here, as I told, on lower low for beginner. But if you are an professional or intermediate, your entry will be here. Okay, then we go here. We got an selling. Okay, the stop loss. Fucking one. We got here 1:2. You can say the stop loss will be here above this. We got 1:2.5. You can say 1:2. So we got 50% quantity, means we got 1% here. Okay, so we got 1% here, 1%, and then we got 1% here. So the market move the up from here. So here now the trend, we can say the trend is of selling now. Okay, the trend is of selling. So this is something. Trend is of selling. First wave, second wave, third wave, fourth wave. Sorry, I marked it incorrectly. First wave, second wave, third wave, fourth wave. This is not a wave, because the fifth wave didn't come on from the trend line, so it should bounce back exactly from the trend line. Okay, it didn't give us any of this. So here we have another small wave. First wave, second wave, third wave, fourth wave, and fifth wave. Okay, so we got all the waves. So on which side we should plan? We should plan for selling or buying. We should plan for selling. Yes, why? Because the overall trend of your selling. But if you are a professional intermediate, you should plan here for buying, because you know that this was a small trend. This is a bullish flag and the market will go up. But for intermediates, as per this strategy, you should not modify the strategy if you are an below. Okay, so this one here, short exactly. If you are an intermediate, you should short exactly on this selling pressure and then this candle. So here will be the short, stop loss just above this sniper entry, I call it a sniper entry. Wait for a minute, let me see the stop loss levels of this. Okay, this is a stop loss level, and then this is 2.5. So we got 2.5 here. Okay, if we enter here, the stop loss will be here. The target goes to at least 1.8. So but this is an SL hit, so SL hit. Okay, and then it moved up, 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 up. So now the trend is of buying or selling. The trend is of buying now, because the trend has retraced more than 60%. I see. Okay. Trend is of buying, so we will plan for buying. First wave, second wave, third wave, fourth wave, fifth wave. Okay, how I just determine this, just wait for a minute, I will tell you how I determine this. If we'll go for this is the trend line forming from this level to these levels. So we have five waves here. This was the first wave, second wave, third wave, fourth wave, and the long wave, fifth wave. And when it touched the trend line, the fifth wave is over. So we should plan for buying. As I told you, do not plan on the first, plan on the second. So where is the second? Second is there. Okay, this is the second. Okay. Wait for a minute. This is the second. Okay, you have to plan directly here. So this is the second. I'm just here. So we didn't got an higher high here, so we will not trade. And on now the third one. Okay, we need a higher high. Na? We need a higher high. Okay. So here we didn't got an higher high. Market up, market up, market got sideways and given higher high. So then we will go for another wave, first wave, second wave, third wave. No wave here. It is quite hard to backtest, now. But yeah, it is the reality. So first wave, we got some waves here. First wave, second wave, third wave, fourth wave, fifth wave. Okay, this is a perfect thing. So what's the trend? Selling. What's the trend? Selling. So we will use Fibonacci. So here the Fibonacci, top to bottom, got trade on the, you can say this, 50% level. Why I'm saying the 50%? Because we marked it from here, market came here, didn't give a lower low. It gave a lower low, but this was something not a lower low, because it didn't cross the wicks. So here a lower low, we are waiting for a lower low. Okay, we got a lower low here. The trade is here, bro. Trade here, stop loss above the high, 1:3. Okay, it just 1:3, 3.26, but 1:3. So here the profit is 2.5% of the account. Okay, 2.5% of the account if you are risking 1%. Then this video will be of 16 minutes, 4 minutes for I will just tell you the results. And then we have this another wave, type of wave. Okay, this uh, I'm not marking the trend line correctly, that's why there's some issue with it. Okay, so I will mark the double ones. Okay, now it's good. Okay, so the trend is of selling, 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 selling. Okay, first wave, second wave, third wave, fourth wave, fifth wave, market broke it here. Plan for selling on Fibonacci retracements. Okay, Fibonacci retracements. Okay, market from here, got an trade, got an entry in the trade. Okay, if you are an intermediate, you should take the trade here, because this is the failure of a higher high. Just understand the psychology. Market came here, market came here, market came here, crossed the upper high, give the buyers and target, and then crossed and made a double top. So this is kind of a lower low for me at least. We will short it here. stop loss above this. Okay, stop loss above this, slightly above. Got 1:2.5, we can say. Okay, 2.5. So yeah, it was something like not great, but it was the thing. Okay, so you can take also 1:2, but we got here 1% of the account. Okay, 1% of the account. So here the time is running, so we'll just take one last analysis and then we'll move. So here on the downtrend we got some waves over here. First wave, sorry, first wave, second wave, third wave, fourth wave, and the fifth wave. So we will sell because the trend is of selling, not on the first, on the second. So this is some twist for all of you. On the second we didn't got end trade, but on the third we got a trade. So here this most selling pressure candle. If you are an intermediate, you should exactly place it here. But if you are a beginner, place on lower lows. Okay. So here a short position, SL above the high, above the zone. Okay, so we got 1:3, but we got a SL hit. So this was the SL. So now the result time is here. However, mm, this is for beginners. If this I made for intermediates, this will be a high winning rate. But let us analyze from what was our result. What is our result? So we started from here. We got here 1% of the account. Let's suppose the account is of $1 million. Let's suppose the account is like 100%. Okay, so 1% here, 2.5% here, 3.5%, 4.5%. SL got an SL, so got an SL 4.5, 3.5. Okay, 3.5, and then 4, and then 3.5, 4.5, 5. Okay, this is 5%, 6%, and 5% now, and then okay. So how many trades we take? We made 5%. Okay, in how many trades we made 5%? So this is essential. 1 2 3 1 2 3 4 5 6 7. In 7 trades, in just 7 trades, we made 5%. Means in just 7 days, if you are trading, taking one trade a day, you just made 5% in 7 days. Means if you are making 5% in every week, you make around 20% every month, which is a good thing. And if this I made for intermediates, this would be around 10%, and you will make 50% a month. Okay, so how many trades were win? One. How many trades we took? We did 7 trades. Okay, how many was win? One, two, three, four. Sorry, one, two, three, four, five, six, five. This was a win, and then five. Out of 7 trades, we won 5 trades. I mean, this is a probability of around of to 80%. So this is the strategy. This probability is of 80%, and if it is for intermediate, you should short on at least on the selling pressure candles or on the buying pressure candles. You will get around of to 90% as your probability. Thanks for watching this video. I hope you understood it well. Thanks for watching this video. Please leave a like, share, and do subscribe the channel. Okay.